in the West, we're going to have banking problems. We're starting to have rumblings again in the repo market. I mean, you're talking about literally trillions of dollars that are going to move into gold and silver, but the price is going to explode, and it will be real raw buying. But the real fun is going to be watching the shorts get squeezed. You could wake up, we'll go through a period of time where you see silver move $1, $2 a day, and then you're going to see $5 and $10 moves. Then all of a sudden you're going to start seeing $50 and $100 moves. And I'm talking about silver now, I'm not talking about gold. And I think you're going to start seeing $200 day moves in gold.
Got a failing, when you got someone in a debt crisis and the whole thing's failing, and it's likely to trigger complete financial chaos, why have anything in it? Just get the hell out. And the only way you get the hell out is to get out of credit and get into real money, which of course is gold.
Wouldn't be surprised that Russia is standing behind this change of the system, and China for that matter.
In today's recap, we dive into the powerful insights of three top experts, Andy Schectman, Bill Holter, and Alasdair Macleod, who reveal what's ahead for gold and silver prices and how you can best prepare. We've sifted through hours of footage to bring you the most valuable highlights so you can get the essentials without the time commitment. If you're looking to stay ahead in the precious metals market, you won't want to miss what these experts have to say. Now smash the subscribe button and turn on notifications so you do not miss out our recaps. Enjoy the episode.
That situation exists again today. There were many multiples of paper contracts that had been sold short that had previously suppressed the price, and those needed to be covered. I forget who it was, and I think it was, it might have been Bank of America, it might have been JP Morgan, I forget who it was that was really short. After the, I think it was JP Morgan, because they absorbed Bear Stearns, and I think Lehman was also short, but Bear Stearns was the big silver short. So those had to be covered, and that was basically a short covering operation. You have that same thing today. I believe Bank of America is the big short, and but this is way bigger than back then. I mean, to see it move to $50, and that would be it. I'd be shocked if that were to happen. We've got, from what I understand, there's 406 paper ounces now for every 1 real ounce that exists. So there's gasoline for the short squeeze fire. You also have, isn't it interesting that Saudi Arabia did not, from what I understand, they did not attend the BRICS meeting. And I think the reason being, they're sitting on what, $600 or $800 billion worth of treasuries, and they don't want to see the same thing happen to their treasuries that happened to the Russian treasuries, the 300 plus billion that were sequestered, stolen, whatever you want to call it. That's $800 billion that could move into metal. I just posted an article yesterday or the day before showing the amount of the volume on the Shanghai exchange. The volume has just exploded in the last month or two. And if you're not familiar with the thought process of the Chinese, I'll just say that there is no gold bull market like a Chinese gold bull market. They are speculators at heart, and they will chase price. So there's another can of gasoline. India has been a huge importer. That's another can of gasoline. And then after that, in the West, we're going to have banking problems. We're starting to have rumblings again in the repo market. I mean, you're talking about literally trillions of dollars that are going to move into gold and silver, and that's like trying to put Niagara Falls through a garden hose. You can't do it, but the price is going to explode, and it will be real raw buying. But the the real fun is going to be watching the shorts get squeezed. Yeah, well, that's huge. I mean, hey, when you use the term marginal buyer, it's a buyer on the margin, but Russia by no means is a marginal buyer. I mean, they could step up and easily put, $50, $100 million a month. And in the very first month, there'd be a failure to deliver, and all available gold and silver for sale today would not be for sale tomorrow. That would all go into hiding. So, yeah, that's another huge buyer. And I just want to say that, there is this concentrated short position in silver, and that's been used to manage the price. But you have to be absolutely insane or suicidal to want to short silver at these levels. We've broken over the 3250 level. There's really nothing technically between here and 50. 50 breaks, and then there is no technical area to stop it. And it's a crowded trade. I mean, it is a concentrated short that at some point in time has got to be covered. Do they really believe they're going to be able to cover it at 25 or 20 or 15? No, they're going to be forced to cover. And it could be, you could wake up, we'll go through a period of time where you see silver move $1, $2 a day, and then you're going to see $5 and $10 moves. Then all of a sudden you're going to start seeing $50 and $100 moves. And I'm talking about silver now, not talking about gold. And I think you're going to start seeing $200 day moves in gold. It's a function of shorts being forced to buy because they get a margin call. And I mean, you've got to be suicidal to want to short silver, which is the cheapest asset on the planet.
Now, Alasdair Macleod dives into the BRICS nations' master plan and reveals how their strategy could reshape the role of gold and silver in the global economy. As BRICS works toward establishing a new currency framework, Alasdair shares critical insights on what this could mean for precious metals prices and the potential shift away from the dollar.
The new BRICS currency is not going to happen. Forget it. I mean, it really is. So I think we just dismiss all talk about it. If anything happens, it will be as a result of the collapse of our currencies, because our currencies are credit. As someone said before a congressional committee a long time ago, the dollar depends on the faith, if you like, that people have in it, the faith and the credit in the U.S. government. So, when that collapses, then there may be a change. And I guess that the change will not be a new BRICS currency, but what it will be, I think, is for defensive reasons, China and Russia putting their currencies onto a gold standard. Now, whether they do it properly or not, we'll have to see at the time. I mean, it's very, very simple to do. So I think that's the important thing. Now, in terms of any comparison between the European Union and BRICS, the big difference is that the European Union is a political union, whereas BRICS is in effect a trade union. It's a union based on if you like, free trade between the members. That's the whole point of it. And principally, it's not just free trade, but also the recycling of investment to improve the infrastructure in these countries, to allow for the extradition of commodities and all the rest of it. I mean, for example, the building of a railway from Mombasa on the East African coast all the way through to the Congo is all about shipping out, sort of things like cobalt and copper and, all these wonderful things that are being discovered in the Congo. And in return, of course, the Chinese, are importing capital in. So the currency thing doesn't really matter in a sense. What they're doing is they're importing capital into places like Kenya, Uganda, Belgium, the old Belgian Congo, the Congo, Central African Republic, and so on. The idea basically being that by improving communications, by opening up the country properly, investing in it, then everybody's going to benefit, including China. The only country with a problem in this, I guess, really, is Russia, because Russia is a huge net exporter of energy in particular and other commodities, and does not have imports that match. So she is always having to import other currencies, which is the result, if you like, of her sales of energy in particular. So she's up to her neck in Indian rupees, for example. Now, that's not a very happy situation for Russia. And I think that's why Russia was actually quite keen to push the idea of a gold-backed BRICS trade settlement currency back in August last year, ahead of the Johannesburg summit. But that is now a dead duck. That's not going to happen. If, as I say, if anything happens, it will be as a result of the collapse of currencies in the West. I mean, the other thing, so to respond to your listener's question, viewer's question, I mean, really what they're trying to do is they're trying to assemble a parallel world, if you like, to the West, so that instead of the IMF and the World Bank, you've got the New Development Bank, which will do similar functions. They're planning, and this was announced at Kazan, they're planning, new precious metals exchanges, wheat exchanges. They're looking at other commodity exchanges and all the rest of it. So the idea basically is to build a complete parallel structure so that they don't rely on Western capital markets to sell and acquire commodities and all the rest of it.
Silver price forecast. Bears have the upper hand. Ascending channel breakdown in play. Silver trades with negative bias for the second straight day, though lacks follow-through selling. A fall below the 50-day SMA validates an ascending channel breakdown and favors bearish traders. Any meaningful recovery attempt might now be seen as a selling opportunity and remain limited. Silver remains on the back foot through the first half of the European session on Thursday, albeit manages to hold above the $31 mark. The technical setup, however, seems tilted in favor of bearish traders and suggests that the path of least resistance for the white metal remains to the downside. The overnight downfall and a subsequent weakness below the 50-day simple moving average confirmed a short-term ascending trend channel breakdown. Furthermore, oscillators on the daily chart have been gaining negative traction and add credence to the near-term negative outlook. Any further decline, however, is likely to find decent support near the 100-day SMA, currently pegged near the $30.40 to $30.35 region. On the flip side, the 50-day SMA support breakpoint around the $31.35 area now seems to act as an immediate hurdle. A sustained strength beyond could trigger a short covering rally towards the $31 and 75 cents intermediate resistance, the $32 round figure, and the $32 and 25 cents to $30.30 supply zone. Any further move up is more likely to attract fresh sellers and remain capped near the ascending channel support breakpoint around the $32.75 region. Now we'll show you more clips, but first subscribe and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Tension.
Yeah, well, I mean, the BRICS is a growing chorus of countries. It's originally started about 18 years ago, the acronym for Brazil, Russia, India, China, South Africa. It has grown to 9 countries when you add in the others: Egypt, Ethiopia, Iran, United Arab Emirates, and Saudi Arabia straddling the fence. And the meeting that we had here in Russia, a lot of things were on the table. Some things are very interesting how they played out, but some of the things that people were expecting was again a some form of a common settlement currency. And the BIS kind of put a knife into that, which I think we'll talk about in a little bit. But some things came out of the BRICS meeting in terms of, look, we're seeing, I don't know, as many as 40 countries have informally applied to the meeting, or to the fold rather, thrown their hat into the ring with, I don't know, 20, 25 that have formally applied and up to 40 that have expressed interest. And this is a trend that is growing, but one that will, I think, be met with a lot of challenges. And, you know, the big pushback that a lot of people have with this group is trust. Who's going to trust who? These countries are very much, in many ways, opposed on certain narratives. Is the conventional wisdom, and I think that, at least on the onset, what struck me was what they're trying to show is unity, strength through unity. And I'll just say that in two examples that stuck out to me, they made a very big deal about showing how Modi from India and Xi Jinping from China met on the sidelines to agree on issues regarding their border in Kashmir, that it was very friendly, that they are moving towards common goals and peace through unity. And the same thing could be said of Iran and Saudi Arabia, Sunni and Shiite countries that for years, if not centuries, have been at each other's throats. China brokered a peace deal between them last year, and lo and behold, talk of building embassies in each other's countries, and it was announced that they're going to have a joint naval exercise. So, look, I think we'll get into what happened there, but what they're trying to show the world is that this is a new way of multipolarity, where it is not about coercion, but rather cooperation. And they're really trying to make, I think, an effort to show that, which is a good thing, of course. But in essence, what BRICS is to me, Jay, is a group of countries that are pushing back against the Western hegemony, pushing back against the ability of the West to make rules and to impose sanctions, and at the same time to really, I think, disrespect, if you will, the privilege of being the world reserve currency in the way that we are conducting our fiscal and monetary affairs.
That wraps up today's insights from Andy Schectman, Bill Holter, and Alasdair Macleod. Each expert brought a unique perspective on the future of gold and silver, from Schectman's focus on wealth preservation amid economic uncertainty to Holter's warning on debt and inflation, and Macleod's deep dive into the BRICS plan and its impact on global currency dynamics. Together, they offer a powerful roadmap for anyone looking to safeguard their assets in these unpredictable times. Let us know which insights resonated most with you in the comments below, and don't forget to subscribe for more expert analysis on the precious metals market. Check this vid right here, and we'll see you on the other side.